Hi, this is Jack, and with me are the Research Maniacs. Today, we are going to talk about the Intel stock, which is the stock that has been falling out of grace in the last few weeks, but I feel have been hitting a reasonable valuation. Without further ado, Intel's business is based off 5 different segments. The first one being the client computing group. The client computing group takes up 53% of their revenue and involves making of processors for CPUs, laptops, and desktops. The other 4 segments are relatively new. The data center group, making server processors for big clients such as Facebook, Baidu, Tencent, to name a few. Also houses the AI segments for AI processors. Internet of Things group, making things like your modems, and also houses their Mobileye, autonomous driving vehicle group. The non-volatile memory solutions group, which is the NAND flash memory, making of NAND flash memory. This is Intel's newest segment where they are trying to enter the memory market. Programmable solutions group is 3%, takes up making programmable semiconductors for various clients. So we're going to talk about 2 main business segments here, CPU market and the server processor market. So the AMD CPU market share amounted to 31% in the last quarter of 2019, but that means Intel has approximately 70% of the CPU market share. For server processors, Intel also takes the lion's share at 93% of all server processors having Intel chips. But it is important to note that AMD has successfully stolen market share over the last 3 years. And this is why everybody is so bearish on the Intel stock. In the near future, Intel intends to move away from their client computing group and developing the other data-centric business segments. So currently, we are at 50% of their revenue coming from the client computing group. But in the future, they intend to make 70% come from the data-centric group. This data-centric group involves the 4 business segments that are newer and currently developing. So far, they seem to be doing well. Intel's numbers are absolutely fantastic. As you can see, the revenue, the net income, the EPS, the free cash flow, they're all pretty fantastic, even the debt. And this is quite rare for a growing company. Let's talk about the risk. The main reason why Intel stock has fallen over the last few weeks is the concern that AMD is going to keep taking market share away from Intel. With the delay of the 7nm chip, it seems like more market share is going to be stolen. Looking at this chart, it seems that AMD has managed to steadily increase their market share over the last 3 years, 2017, 2018, 2019. Even worse, analysts have estimated that AMD will increase its servers market share from 7% to 10% by the end of 2020. However, there are many future growth drivers for Intel's case. Tech is growing at a record pace. I'm sure you guys already know. The number of data centers used by companies and governments are increasing at a rate never before seen. Intel provides the picks and shovels to these data center gold mines. If big companies, that already partner with Intel, like Tencent, Facebook, Alibaba, Baidu, they buy more servers, Intel will benefit because they get to sell more processors. Another exciting industry is the autonomous driving industry, which is going to grow at 20 CAGR, which is compound annual growth rate. This Tesla could be the leader of autonomous driving field, but it is hard to imagine the other huge car companies such as Nissan, Audi, BMW, Honda, Chrysler, NIO, which by the way has already pledged to use Mobileye chips in their vehicles. So when the autonomous driving manages to take off, Intel will definitely benefit as well. Intel's R&D budget is 4 times the total revenue of AMD and Nvidia put together. This is very important in a very, very competitive semiconductor space, because having the funds to develop a better chip can make a big difference. People tend to ignore chips that are obsolete. This is exactly what happened to AMD in 2015, where they nearly went bankrupt. Now, I do love AMD, okay, but I do not like their valuation. Intel's PE is at 9 for now, and AMD is at 160. If you clearly look at the entire sector, you can tell that Intel valuation is at a very attractive position right now. This is the discounted cash flow calculator that I have, and I've found that Intel's intrinsic value is actually $91. Compared to its current price, there's a very big margin of safety that you can have if you purchase it at this price. Lastly, Intel has proven to be very aligned with shareholder interests. They have raised the dividends per share for 10 years straight. They have also made good buyback prices without compromising their debt. As you can see from the cash back to shareholders graph, the dividends per share as well as the buybacks have been increasing over the years. Intel has also promised a $10 billion accelerated share buyback purchase agreements recently. This really reminds me of Apple. Apple is a giant conglomerate who has not been growing at a very fast pace. However, because of his share buybacks, his share price has risen very significantly. This is what could happen to Intel in the future, who knows? Finally, my conclusion, people are so concerned that the market share will be lost to AMD. And this is to be expected because AMD is such a small, fast-growing company. It is hard to keep up with them. However, they forget that there is great tailwinds in this semiconductor space, especially in a place where Intel is supplying shovels to all the tech giants. Even if market share is lost, it is very likely there will still be a lot of profit growth for Intel in the next coming decade. Thank you, everyone.
Okay, thanks, Jack, for sharing about Intel. And so, I do agree with you that Intel is a great company. And based on the valuation that I saw from Morningstar valuation, all the price ratio, price to earning, cash flow, and book, currently all are below 5 years average of that particular ratio. So in this case, I really do believe that Intel is a great company and undervalued. How about you, Kevin?
Okay, thank you. So for me, Intel is a great company. However, I have a concern, which is the efficiency of the company itself. So based on one of article in internet say that their 7 nanometer was 1 year behind the schedule. Like, look, Intel has a huge R&D cost, but they are 12 months behind. So I am a bit worried, but nevertheless, Intel has a great financial with a great price right now. So I am interested in Intel. So I'm going to pass this to Jack.
Okay, so what happened is we already discussed among the three of us, okay, and we have the following prices. Click the prices open. Yeah, so as you can see, these are the prices that we are willing to enter at. And Intel is currently, I believe, even below Veronica's price at $50. We all view that Intel is a great company at a very attractive price. If the price falls further, of course, we'll be more than willing to put in more money into it. As discussed, my intrinsic value is at $90, and at 60, even at 60, it is a big margin of safety that we can enter at. Okay, thank you everyone for this, our analysis of Intel. We hope you enjoyed it. Please like and subscribe. Thank you.